I learned how to trade when I was a completely broke 15-year-old mowing lawns, but 7 years later, I made over $2 million from trading alone. In this video, I'm going to show you exactly how I would grow a small trading account if I had to start over again. I'm breaking down the psychology, the risk management, and the exact strategy I use to go from just a couple $100s a day to 7 figures. Let's get into it. Before anything, we need to talk about the psychology you need to go into this. Most beginners lose money not because their strategy is bad, but because their mindset is completely wrong. They take revenge trades after a loss, they get greedy after one win, and they risk too much to make it back. And that's how they blow their entire account. I know because I did it over and over again. So if you're trading a small account, you need to understand that number one edge is discipline and not dollar size. You need to treat that account like it's 6 figures already, because if you can't follow rules with $500, you'll break them with 50,000. And realistically, your job isn't to win every trade. That's literally impossible. Your job is to protect your money and stay in the game long enough to let the strategy's edge play out over time so you're really able to get that compounding effect. So what strategy should you be using to grow a small account? Well, I have a strategy that I use to grow my own account from just a couple $100s to over 7 figures. And I've been using it for over 7 years now and it has over an 80% win rate. So right here is a trade that I took a couple of days ago, and I entered here for the breakout when it went green to red at this 574 key level, and I exited right as it started coming down in this area right here. Now this exact setup made me $13,000, but how did I know where to trade and when to enter? Well, the first step to the strategy is finding our key levels. So let's go ahead and look for this key level. Let's go to the 1 hour time frame and let's look to see where the reactions are at. As you guys can see, where are we reacting at? We're reacting right at this 574. How do I know that? Because every time price came up to this level, we rejected, right? We're just rejecting this area, rejecting, and then we finally try to break through and we're still rejecting this area. Then guess what? We had a very nice breakout. This allows us to make a key level here. Now, once price approaches your key level, you need to look for 2 things. The first thing is good price action. Now, let's take a look at the 1 hour time frame. What does good price action mean? It means that we're getting moves in one direction. It's actually picking a direction. It's not chopping around and going back and forth, like for example, right here. You don't want to see price going back and forth. You wanted to see it have an aggressive move in one direction or the other. We had this very nice downside move. We reacted right at 574. We came up to around halfway of this move to the downside, and then we were very aggressive right back down. It looks really nice, right? This is really good price action. Now, if price action looks good as it's coming to your key levels, you can now look for the next confirmation, which is momentum on the time and sales. This is literally the secret of how I'm able to get these sniper entries as well as a 90% win rate with this strategy. And if you don't know, time and sales is an indicator that I use to show real-time buyers and sellers on my screen. So it allows me to see if buyers or sellers are in control. Now, this is the only indicator you should be using. Any other indicator is lagging and will not help you at all. So how do you actually use time and sales to enter on these breakout trades? Let's take a look at the exact video that shows this breakdown to the 574 downside level. Now, what I'm looking for on the time of sales is velocity and aggression in the direction that I want. So I want to see this speed up super aggressively. So I want this to keep flashing faster and faster and faster, showing that there's more orders coming into this 574 area. And I also want to make sure that the bid, which is right here, and the ask is also dropping really fast as we're approaching this 574 key level right here. As you guys can see, look how it's starting to increase in orders, right? It's kind of chilling here. It's starting to increase a little bit. We were just in the 30s. Now we're in the 20s. I want to see this drop. 20s, 10s, and then we're right down to the lower zeros right here on this 574 with aggression. Right? You guys can see this. Watch how slow this velocity is, right? It's still fast, but it starts to get way faster. Ready? See that little pulse right there? And then look how aggressive that is, and look how fast that momentum actually is as well. It went from 30s, 20s, 10s, and it was stuck in the 20s for a little bit. That's the velocity, that's the aggression that I want. This is the price action I like to see. Now it's reacting right around that 574 key level, and this low is where I'm going to enter just because this was extended. So watch, ready? I'm going to go green to red, and this was all live, by the way, not hindsight. Kind of chilling here, right? There's no velocity on the tape just yet, no downside aggression, and then boom, look how aggressive that is. Look how aggressive that time of sales is, and look at the speed starts to increase greatly as we started coming down. The sellers are starting to come in. We went green to red. This is the aggression that we want to see. It looks really nice. We had this nice downside move. Look at this, just this nice 60s, 70s, right? We're aggressive. We're trying to make this new low, another new low, right? We just had this very nice aggressive move to the downside on this break. Price action looks good here. We had this nice consolidation zone right here. We broke under it, came back above, came back, retested this area, and then we absolutely fell. We saw the aggression of sellers coming in as we were coming up to this area right here, and then we absolutely died. This 566 is our key level. Look at the change in velocity on the time of sales right there. You guys just saw that. Ready? Watch. It's not aggressive. There's no velocity yet. And then watch. There we go. Look at that aggression. Look at that velocity. That is showing that there's a lot of sellers coming in there. That's where I want to get in at on that break. And then look at what happens right after. Like, it just literally dies, right? Such a nice risk to reward. My stop loss is going to be the low of this candle right here. Very nice risk to reward. And this thing just keeps dying. Like, look at this aggression and velocity here. Boom. Oh my gosh. And it just kept going. It just kept going. Here's another example of a trade. This 573 is our key level. Here's the time of sales right here. And my stop loss is going to be the low of this candle. What we're looking for is that speed and aggression. Look at that. Look at that speed and aggression. Look how slow it was. We're stuck in the 80s, 90s, 100s, 03, right? Like, we just jumped up that fast. Watch. We're in the 80s, 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 right? Just do this in your head. 80s. 80s, 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 right? We're just stuck here. 70s, 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 80s, 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 stuck in the 80s, 80s, 90s, O's, 10s, right? Like, it just jumps like that. That's the aggression. See the speed of change, velocity right there. It looks really nice, and it would just keep going up. That's exactly what I like to look for. The previous price action was looking good as well. We could see that we had this nice rejection at the high of this area. We came down, came back up, held this support around that 572, came up nice and aggressive there into that 573 break. We wanted to see a nice reaction just because this was extended, preferably right into this area, came down, and then come right back up. Okay, let's go over another example of how we trade. Now, the first things first is we are identifying a key level. We're identifying a reactive area on the chart. Now, for example, this 435 right here is reactive on this chart. Now, why do we look for reactions? Well, the reason why we look for reactions is because we want to see where price is stopping at. Why do we want to see where price is stopping at? Because that means there could potentially be orders waiting to be executed at a certain level. So if we're stopping at a specific area like 435, there might be a huge wall in this area that if we break, we would have a nice breakout just like this. So we need to find areas of reactions. And I always like to look for two reactions. So we got one right here, and then we got another one right here. We're reacting at this 435, which shows us that it's not a coincidence and there actually might be something in this area. So we identified that this is a potential key level, this 435. We got the reactions here on the 1 hour time frame, showing us that there's a reason why price is stopping there. So next up is we go to the 1 minute time frame and we want to see what it did in that area. We could see that it's also reacting there. So there's obviously something there that's preventing us from going further. So what happens after a dam breaks? Because it's holding all that water back, but we need enough water pressure in order to break that dam. So the next part of the strategy is seeing how price action is moving. In order to break this wall, we need enough buyers to come in, because every single time we come up to here, we keep rejecting. So we need a surplus of buyers. How do we identify that? By price action and time of sales. Now, we identified that we went red to green. Buyers are able to hold this up. We're continuing to the upside, and then we get an intraday reaction, which means that we got a reaction on the 1 minute time frame instead of the 1 hour time frame. So that shows us that this level is still valid. 435 is still valid. We still got a reaction in this specific area, showing us that there's still a wall there, right? There's a lot of selling pressure in that area because there's a lot of orders waiting to be executed, but these buyers are still able to hold it up. These buyers are still showing strength and showing that they are there. When we get into this area, we want to see what the time of sales is doing. The reason why we want to see what the time of sales is doing is because we need to make sure there's enough buyers to be able to break this 435 wall. There's a wall there. We need to break it. How do we identify if it's going to break or not? By looking what buyers and sellers are doing real time. How do we see what buyers and sellers are doing real time? We look at the time of sales. So let's bring up the time of sales. And we're looking to the right here, right? This is the reason why I don't have any indicators on my chart, because the whole reason why price moves is because buyers and sellers. If we could identify what buyers and sellers notice it doing real time, then we don't need any other indicators. So right now we're looking for velocity, which means the speed. We want to make sure that there's orders coming in order to break this, right? We need a lot of orders to come in order to break this. And we also need to make sure that they're buyers. So we want to see aggression. So right now we're at 434.20s. We want to see like 30s, 40s, 50s, 60s, 70s, 80s, aggressively, fast. That shows that we're going to have a higher probability of this 435 breaking and breaking nicely. 40s, 30s, 40s, 50s, 60s, 70s, 70s, 60s, 60s, 50s, right? 60s, 70s, 80s, 90s, 435, right? That's the aggression. That's the velocity is coming into this 435. Then we have a slight pullback. People just taking profits right to that 435. We're able to hold it on the time of sale as well. And then guess what? We absolutely start exploding. 1 to 3 risk to reward on this trade. Our risk right here. Our reward, a 1 to 2 risk to reward was met on this candle. Then this candle, 1 to 3, 1 to 4, 1 to 5. Right? This was a 1 to 5 risk to reward, and my full ROI was 1 to 3. Amazing trade. And now you know the exact way that I would grow a small account in 2025. But if you guys want any extra help with this, you guys can join my free Discord, link in the description below. I answer questions, host lessons, and I also do live trading for free once a week for the free members. Thank you guys for watching.